And welcome to another Mark Bishop show. You know, Americans, we've got a lot going on, haven't we? Americans are at the crossroads with the economy. A new survey reveals 83% of Americans are concerned about the rate of inflation. So for advice for consumers, help us out a little on how to navigate economic uncertainty from this pandemic. The survey methodology, and it was conducted by global data intelligence company Morning Consult among a national sample 2,200 adults from January the 7th to January the 10th. Now, Mona Mahajan is a senior investment strategist at Edward Jones. She's going to put a few things straight for us. Welcome, Mona.
Thanks so much. Happy to be here.
Well, according to a new study from financial services firm Edward Jones, Americans are at crossroads with how they view the current state of the U.S. economy. What say you?
Yeah, absolutely. Look, it's been a difficult 2 years for a lot of Americans. Not only are we now emerging from a global pandemic, we are now also facing some of the tragedies of war in Russia and Ukraine. As you noted, inflation was a primary concern for many Americans, and that's probably only exacerbated by maybe higher oil prices, higher food prices, some additional supply chain disruptions coming out of the geopolitical crisis as well. You know, we found is that when Americans do get concerned, when they have that anxiety or fear or uncertainty, they tend to try to make decisions in their portfolios. For better or worse, they feel the need to do something. But the good news is we also found that those Americans that have worked with financial advisors tend to make decisions more based on economic fundamentals, on their long-term goals, and even on, their enhanced financial literacy and as to what's going on in markets. So there's the good news. For us, the fundamentals in the economy still remain solid. Some of the volatility we're seeing near term could actually present some opportunities.
Yeah, it is concerning. Let's take an in-depth squeeze at all of this, Mona. Nearly 1 in 3 Americans are not confident that they know how changes to the economy impact their personal finances. What people consider when making financial decisions. 30% of respondents say careful financial planning. 23% seek advice from friends and family. And 23% watch the market. And 22% seek advice from a financial advisor. What's your take on those percentages? They seem awfully high.
Yeah, absolutely. And the interesting one is those that do seek advice from a financial advisor, about 22%. Of those, 79% do emphasize the importance of that relationship in bringing less stress, less anxiety, and more economic confidence and financial, literacy, as we call it, financial wellness. Now, of course, what's interesting also is that, yes, 1 in 5 Americans do admit to making emotional decisions when it comes to their personal finances. Also interesting, that number increases as you get to that younger generation, Gen Z. 1 in 3 of them say they make emotional decisions. Could it be because they're more exposed to the social media and the online influences and less certainty around education in economics and finance? And so for us, the importance of someone in your life, whether it's an advisor or someone who's knowledgeable, to fill that gap between what you know and what you should know and what you should do in your portfolios is very important, especially with this elevated volatility that we're seeing in markets.
I'm speaking with Mona Mahajan. She's the Senior Investment Strategist at Edward Jones. How are, Mona, economic changes like interest and inflation rates and supply chain disruptions, for that matter, how are they having an impact on personal finances? Yeah,
absolutely. So, inflation, of course, does drive things like your gas prices at the pump, your grocery store bills, and certainly broader, more expensive purchases like homes or cars have all seen upward pressure on prices. It's also been causing a little bit of, consternation in the stock markets as well, especially as inflation has risen and we have not yet seen a rise in interest rates. Now, we think that picture is changing. We think the Federal Reserve will start raising interest rates in mid-March. And so when we think about the two components of inflation, which are supply and demand, we do think over time the supply picture gets better because supply chains will start to improve from this post-pandemic environment. We'll get more labor supply, hopefully better supply chains around the globe. And on the demand side, we do think as the interest rate rises occur, we'll get demand that's a little more contained versus this, reopening demand that we've seen, particularly in the goods market. And so when inflation eases, we should see better outcomes across the board, including, from both the stock markets, but also better prices at the pump, better inflationary pressures broadly. So for us, as we get towards the second half of the year, we do see a lot of these pressures alleviating. That's why it's important to either think about your portfolio now or make your wish list and take advantage of some of these pricing dislocations.
And by the way, folks, a bit more reading is www.edwardjones.com. That is the website to go to. So what did your latest survey reveal about the spending habits of people, reacting to uncertainty from the pandemic? And now, of course, we've got this business with Russia.
Yes. So, of course, the uncertainty from the pandemic itself, as we noted, has created some frustration, some sources of stress, anxiety, and has led to some decision-making in personal portfolios. For better or worse, people feel the need to do something when they see some of this volatility. And so, we do find that that's why working with someone is a key part of really kind of building that bridge to becoming a more steadfast investor and attaining your long-term goals. Now, keep in mind, market volatility is the norm. We tended not to see much of that post-pandemic. In fact, since March of 2020, equity markets have had very little volatility. We only had 1 or 2 5% corrections in the S&P 500. And in fact, on average, 1 to 3 corrections in the 5 to 10% range are the norm. So this year, when we're getting this 10% correction in markets, it's much more in line with historical averages, although it can feel disconcerting. And there are two sources of uncertainty that we are dealing with, not only the Federal Reserve and the interest rate picture, but also now this geopolitical crisis. So we think as we get more certainty on both fronts, and hopefully we do get more clarity in the weeks ahead, we'll get a little bit more steadiness in markets. And so that's why it's important not to take these periods of volatility as opportunities necessarily to make changes, but to really think about, do we need to rebalance our portfolios? Do we need to add exposure to certain areas? Right. And that's really where an advisor can come in handy.
Yep, there's no doubt about it. When you can have all that stress taken off you and talk with a pro and sit down and really, get into things. Well, let's talk about advice that you'd like to give to people. What do you have for people who gravitate towards making financial decisions, but dangerously based on emotion?
Yes. So, generally speaking, what we'd say is, one, take a step back and look at the broader economic picture. In this case, the economic fundamentals in the U.S. are actually pretty sound. We expect economic growth to be above average. We see the consumer relatively healthy still, good balance sheets, elevated savings rates. So it's important, one, to take a step back and look at the longer term picture. Two, if you do work with someone, it's important to touch base, make sure your long-term financial strategies and plans are intact, that you're positioned accordingly. And then three, really kind of think about how you would use these periods as opportunities. Are there places you can add to that you have less exposure to, perhaps across asset classes like equities or bonds, or perhaps within equities? Do you have the exposure that you think does feel right for your own personal goals, or is right for your own personal goals? And so we certainly think periods of volatility will happen, and we may see more periods of volatility in the year ahead. But again, these are normal in terms of historical context. We don't yet see, really when we get concerned is when we're in a recessionary environment or the Fed's at the end of its tightening cycle. Neither of those are in place in the year ahead. And so we feel like these periods of volatility are actually opportunities that are presented.
Well, there you have it, folks. Wonderful advice. And from a senior investment strategist at Edward Jones. And that is Mona Mahajan. Thank you, Mona. You know, overall, encouraging news. So thanks for that. We could certainly do with it.
Absolutely. And have a great week ahead.
You too. Goodbye now. Don't forget, folks, www.edwardjones.com. Go in there with a cup of tea or coffee with your bodgies on and have a good read. There's a lot you'll learn.